Welcome back to Market on Close. Dollar firm today. A strong rally in the greenback, and that's putting pressure across some of the markets we watch, especially in gold. Let's bring in Scott Bauer, who's joining us today. So, Scott, as you know, my confidence in gold's long-term trend has been waning here, and I got to say, it's my view on that is only becoming stronger. I know you've been more optimistic. So, at what point will it break you?
I have been optimistic for this massive, great trading range that we have been in. Buying it when it's, gone down about the 1850-ish level, selling it up around the 1920-ish level. That range has held, and I don't think it's any different this time, Oliver. And what I see today is, the weakness in gold today is really on two things: the dollar and what rates are doing here. Look at TLT, so the inverse, which is directly correlated with rates. And just as the dollar is strengthening, so gold is weakening here today. Same thing we're seeing with bonds. There's a rally in bonds, yields are coming down. That's affecting gold as well. So my longer term outlook here is unchanged. Trading this range has been one of the most successful trades over probably the last 3 to 4 months.
Okay, and as you pointed out to us before here, until that range breaks, that's the one you're going to believe, as it hasn't, slipped too far out of it. I look at the chart, and if we take it back to year to date, I'm watching since August this trend of lower highs, and then going back, way back, the trend of the higher lows, of course, that now, I don't know, if I look at this, it looks like maybe there's a triangle or a wedge or a something. Do you think we will get a big move coming here for gold over the next couple of weeks?
I don't know about a big move, but I think that up until the election, unless we see a massive, massive rally in the dollar here, up until the election, I think there's an underpinning here. I think there's a big headwind, if you will, supporting gold just because of the uncertainty. Now, what happens in the last 6 weeks of the year or so, with gold, to me, is squarely going to depend on what happens maybe with inflation, rates, and obviously also the dollar. But I think at least over the next few weeks here, it's hard for me not to remain optimistic.
Now, for gold, Scott, the story about it and why to own and why to buy it, I know you look at it from this technical basis as a trader, and there's a lot of other people, though, who look at it on a fundamental basis about why we need to have gold. Did that take a hit this morning as our inflation prints turned a little bit cooler than the last read? I mean, it looks like gold's big cascade this morning started pretty much around the CPI that did not exceed expectations.
Yeah, and then it accelerated a little bit as well when, more talks came out during the day out of Congress, really almost dividing, the stimulus.
Gold wants stimulus.
Gold wants stimulus, absolutely. And the more and more that we, saw in the headlines during the day today, it seems like the further and further apart they're going.
So, Scott, if they're not going to get the stimulus, if the inflation's not too warm, eventually, because I know you, even though you're watching it from the technicals, I know you know the fundamental story. At what point do you look at it and say, okay, it's at risk then? I mean, if we've had this huge run in gold on this kind of epic tale of runaway inflation, and all the printing that we've had already hasn't done it, and if the printing's not going to start back up again, what then do people hang their hat on for gold?
Well, it's really hard to divide the technical versus the fundamental side here. And I certainly think we are going to get some stimulus package. It may not happen before the election, but there's just too much at risk for the economy and for Main Street not to have some sort of stimulus. So again, I think that is, very, very much underpinning the price of gold. But listen, the longer that drags on, Oliver, to your point, the longer that drags on, if gold continues to make lower highs, maybe some lower lows, do I have a capitulation point? I'd say about 1825 in gold, which is well below that 1850, big support area. In GLD, which I'm going to talk about, which is the gold ETF here.
Yeah, hit me. I know you got a trade.
Yeah, there's some major support around 175, which kind of correlates to about 1870 in gold. So what I'm doing is I'm going out a couple weeks, October 30th till end of the month, and still before the election. To me, that timing is really important. I'm selling the October 30th 176, 173 put spread. I'm going to try and collect $1 there, which I think is enough premium to put into place for me that area of support around 175. Totally risk defined. It can go against me. I know what my risk is. I think this is a really, in my opinion, a very safe trade. And the reason I'm not necessarily buying upside call spread is because I don't necessarily see gold rallying back above those highs, but I really think that area of support there is going to hold in place.
Okay, and to your point about the gold's range, you're acknowledging that the high end of that as well, and where you don't think you need a lot of exposure upwards.
Exactly.
The trade it gets capped out, but starts making money at 175 in GLD. Scott, like the trade, like this conversation. We've got a nice continuing talk on gold here, so we'll continue more of it next time, I'm sure. Appreciate it, Mr. Bauer.
Thanks, Oliver.
CEO of Prosper Trading Academy.